free to find that chat tab and add to the chat as we introduce ourselves here, where you're joining us from in the province or in the country or in the world. I bet there is someone from a very distant place on the webinar today. So welcome to this webinar, the Financial Wake Up Call. I'll introduce Taunya in a moment, but first of all, I would like to do our land acknowledgement. Business Link would like to acknowledge and respect that we're on the traditional land, meeting grounds, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nations, Métis, and Inuit people. In the spirit of reconciliation, we acknowledge the lands of those who have come before us, reside here now, and in the future. So welcome and thank you for attending this Financial Wake Up Call webinar hosted by Taunya Woods Richardson. We are going to, hopefully, we have a very large number of people join us, but we're going to make this as interactive as possible by having people use the chat and use the Q&As throughout here. So I'm going to keep a close eye on that Q&A tab specifically. So if you want to introduce yourself, that's great, use the chat tab. But if you have questions that you would like me to kind of pass on to Taunya there, make sure you use the Q&A tab as we go through this session here. So we've got people joining from St. Paul, from Calgary, from Edmonton, from Swan Hills, and lots of places in between. I'm sure we'll see someone from further afield as we go here. But without further ado, I'd like to introduce Taunya Woods Richardson from Nail the Numbers.
Hello, everybody. Oh, my goodness. It is so great to be here, Matt. I want to thank you so much and Business Link and your crew for this opportunity, especially to talk to all of your amazing founders about finance. I know it's not everybody's first and foremost exciting webinar to go to, right? But thank you for the opportunity. And I want to thank all of you. I'm watching you all on the chat pop up here. I really want to thank you for being here to talk about numbers today, and to not hit the snooze button on this conversation. So I'm so appreciative that you're here. Everybody's motivation is going to be different for being here. You saw the ad about the Founders Wake Up Call and 3 important numbers that every founder needs to know. Everyone's motivation is different, but I can tell you my motivation for being here today is because the numbers aren't great with respect to our stats. So I'm not going to be Debbie Downer, but I just want to be real about kind of where we're at as business owners in Canada these days. 98% of us, this includes sole proprietors, we don't make it past year 5. And the number one reason why we don't get there and why we don't realize our dreams is unfortunately because of poor financial management. 71% of us in Canada have to close our doors because we don't know how to manage the numbers, right? We don't know how to build that budget and measure that budget and implement that budget. So this is a huge reason why I'm here today, is to kind of kickstart this conversation and to get you to want to measure those numbers and to know those numbers as we go forward. So speaking of Financial Literacy Month, I just want to come back to an important stat here, which is when we talked about that 71% failure. It's interesting because over the last decades, I've been in this space for the last 30 years. Every single year, as Matt knows, there's more and more and more information that's put out there with respect to how to manage our monies as Canadians and as founders. But in my opinion, after seeing this for decades, I believe there's a bigger issue at play. And that issue is what I call the gap. And the GAP is an acronym, and the G is for the goal. We don't have a financial goal mapped out in our business, right? So if you think about it just for a second, there's only 2 entrepreneurs that have ever been able to answer this question for me. And the question is, how much do you want your business to be worth? By when? Right? And one of those founders was Skip the Dishes. They knew they wanted to be out at 10 million plus at the very beginning of their journey. So I want you to have a goal, but then what's important to that goal is that you need to be emotionally aligned with the goal. It's not enough to say, I want a $10 million business. You need to know why you want that business to be worth 10 million, and you have to be aligned with it. And then lastly, the P stands for plan, that you have to have a plan to turn that business into a $10 million business. So I think this is a big reason why most business owners fall down in this space. It's not because of the financial management itself. In many cases, it's because they don't have the financial goal, they're not aligned with the financial goal, and they don't have a plan to build that business, right? So ironically, or maybe serendipitously, this month is Financial Literacy Month in Canada. November is Financial Literacy Month. Literacy, not a huge term I'm fond of because it kind of speaks to us being illiterate, which I know we are not. But what I can get behind is that this year's theme is money, let's talk about it. And what I'm so excited to do today is to actually talk about three really important numbers that no one is talking about and which this entire presentation is built on. And those three numbers are return on investment. The second number is founders' compensation. And the third number is retirement shortfall. And you're probably wondering, what the heck do any of those have to do with business? Maybe except for the compensation piece, but the others dovetail in as well. And that's what we're going to do today. I want to introduce you to those three numbers that every founder should know. And in that conversation then, that is part A. I'm going to introduce you to the what is the number, why is it important? But then I'm going to invite you into part B. And part B is the wake up call challenge. And that's going to start on Friday. And we're going to talk about that later. But I'm setting you up now for this conversation because, first of all, I want you to know it's free, right? There's no cost attached to it. Thanks to the folks at Business Link, you are getting the challenge for free. But I want you to know that these numbers that we're going to review today, over 5 days, we get to build them together because we can't build them in 45 minutes. I don't want to say it's impossible, but it's next to impossible to build them all in 45 minutes. So we're going to build those numbers over 5 days. And I'm going to talk to you about that after, but I bring that up now so that you don't feel panicked, you don't feel overwhelmed, that you don't know how to calculate the number, because we are going to do that together. All right. Just a little bit about me. I always forget to introduce myself in this whole concept and why I'm actually talking to you here today with you. My name is Taunya Woods Richardson, and I'm the founder of an organization called Nail the Numbers. And we financially train founders across North America on how to do just that, how to nail their numbers. Maybe more importantly, how to take ownership of their numbers and make smart decisions with their numbers instead of abdicating those decisions to bookkeepers and accountants. Our mission is actually really about helping you to strengthen your mind when it comes to money and putting you in that driver's seat, and then strengthening your bottom line. And we've got a mission of doing that for 1.7 million business owners by 2030. And so I am so excited to announce that we are now working with organizations like Business Link to help them train you on your numbers, because 1.7 million financially fierce founders is a big number. So now the crew at Business Link are in a position to be able to help you through nailing your numbers in business too. So again, Matt, thank you and your crew. That was an absolute joy to be able to work with you in that capacity. And going forward, we've got a lot of exciting work that we're going to be doing together starting in the new year. All right. Okay, without any further ado, I know Matt's going to keep his eye on the chat and the questions for us. And I just do want to mention there's no such thing as a silly question. They're all really important. I wish I would have asked these questions a couple decades ago because I made many of the mistakes that I'm about to go through today. So I want you to know this is a safe place to ask your questions. I made the mistake most likely. And if you're asking the question, I bet you a lot of other people are. All right, so not my favorite part of the presentation because I have to share my screen now. And where are we? There we go. So sharing my screen, everybody can see us. Matt, we're good. You've got ROI up? Perfect. All right. So eye opener number one, ROI. And unfortunately, I can't really, actually, maybe I can ask you questions if I can turn my chat on here to the side so I can see you all. Oh, I can. Okay, so I am going to ask you questions because I usually have a rule of 3 before I move forward, just to make sure everybody is awake on our presentation. So ROI stands for return on investment. And seeing that we are a group of 300 plus entrepreneurs today, put in the chat, what investment do you think I'm talking about when I talk about ROI? Give it a guess. Let's go for 3. I'm trying to see if I can see everybody here. I love it. Okay, we're getting in. I love it. I love it. Okay. Time and money. Yes, time and money, effort, people. Look at all of you. You guys are amazing. Thank you for weighing in. Okay, Gerard, you nailed it. Investment. It's exactly what we're talking about. Return on investment. And the investment is, I love it. Who said yourself, Kara? You're so close there. And Rhonda, you've got it. Investment in your business, right? So the investment that we're talking about today is your business. Now, unfortunately, this is what I did. I treated my business way back. So in 2002, I started up a business called Powerhouse, and I treated that business as an opportunity to be compensated. I looked at the business as a form of compensation and a way to pay myself. I did not look at my business as an investment. I didn't see it as that. And part of the wake up call here today is that your business is likely going to be the biggest investment of time and money that you will make in your lifetime. And until we start seeing it as an investment, it is likely going to be one of the, the poorest performing investments in our portfolio if we don't start taking action on it. So here's what I want us to do next. And sorry, I am looking to scroll. This is new scrolling for me. Here we go. So when we're talking about return, many of us don't know how to calculate the return on our business. So I want to show you a really easy formula. We get to do this together next Thursday. This is our 4th day of an assignment where we actually calculate your ROI. But I want to walk you through how you would do that, a quick and dirty version right here, right now. So what you would need to calculate your ROI is you need your profit and loss report, also known in Canada as an income statement. So in QuickBooks, it actually, they call it a profit and loss report because that's what it is in the States, or P&L. It's also called an income statement. It is also called a statement of earnings. It's also called a statement of loss, unfortunately, if our net profit is in a deficit. So that's the first thing you would need to pull out, not right now, not today, but when you're calculating the numbers. And then what you do is you go up here to your total income. So in this example, I can see that my total income is 328,000. We subtract all of our cost of goods, and then we subtract all of our operating expenses. And I'm going to go through this in more detail when we do the challenge together. So what we get left with at the end of all of our expenses, you can see in this case, we're left with a $9,000 net profit. Now I have an asterisk here, and I want to ask the group, again, the rule of 3, at the end of the day with this net profit, in many cases, not in this case, but in many cases, what are we not including in this net profit? And this might be your situation. So all of our sales minus all of our expenses, we're left with a net profit. And what expense usually, yes, you've got it, Caitlin. Caitlin talked about the owner's salary, right? Oftentimes we take a dividend from the net profit. And I don't want to get into too much detail here, but I want you to know when you're calculating this return for now, if this net profit does not include your salary or your compensation, you have to subtract that from the net profit before you do the math. So the formula is really simple then. All you do is you take your net profit, so in this case, $9,000, you'll see the formula over here, and you divide it by total income, 328. That gives me 0.0274, and then I multiply it by 100 so I can get it as a percentage, right? Because I want to turn that dollar value into percentage. So now I'm sitting at 2.74. Okay, Matt, did any questions come up from that? Usually there's a
No questions yet. We've
no.
just asked people if they can't see that Q&A tab, it might be they might need to click more first. So there's a little kind of add-on menu. So they might need to click more. Yeah.
Awesome. Awesome, everybody. So I'm going to give you some math to do in a minute, and then we're going to put some answers here in the chat. But here's actually maybe what we'll do that right now. So Arlene, what are we multiplying? So what the formula is, we take our net profit, 9,000, divide it by our total income, also known as total sales, also known as total revenue. It all means the same thing. And then that gives us a value here of 0.0274. So whatever that answer is, then Arlene, we multiply that by 100 so that we can turn that into a percentage, right? Which now gives us 2.74. All right. So we've got that math. I want to, that's great, Arlene. Glad you've got that. I want all of you to try it now for the 2022 numbers. I want you to figure out what is the percentage of net profit, right? The ROI on the 2022 numbers. So what would the answer on that being, assuming we can see here that they took out a wage and salary, what number do you get? I'm going to do it with you. Don't forget that net profit is a negative. And then put it in the chat when you've got it. Just want to make sure. Yeah, you got it, Susie. Well done. Everyone's got the math. Fantastic. So in many cases, you're right. Now we're sitting at negative 5.95%, right? So when we think about investments, you're probably familiar with things like your mutual funds, right? Maybe you've got index funds, or I won't get into a whole lesson on investments right now, but you've probably been measuring what is your ROI on those investments, right? And hopefully it wasn't negative 5.95 because we might be changing our investment advisors at that point. But I can tell you in the work that we've been doing for the last 10 years on financial stewardship specifically, the vast majority of us as founders, over 89% of us, are generating less than 3% net profit, less than 3% ROI. Now, I want to ask you, do you think that's a good thing, a not so great thing, or a terrible thing? Like, where do you sit on the fence on that one? A 3% ROI on your business investment. Coming down. Yikes, terrible, not good, not so great, awful. I love it. You guys, thank you so much for showing up here. Beautiful. You're right. It's not great. And this is the wake-up call that I want you to really get from eye-opener number one. A high interest savings account in Canada these days, I think it went down a little bit in the last month, but a high interest savings account would get you 5.5%. 5.5. And just remember, a high interest savings account, A, that money is guaranteed by our Canadian government, and B, it would take you 10 minutes to set it up, maybe 15, maybe a half an hour if you have to source it out. So for 30 minutes of your time, you could have made 5.5% on your investment of time and money. And when I say time, I mean the lost wages. Because if we're honest with ourselves, are we making what we could be making going and working for somebody else? Probably not until we get our business into that place, right? So all of those lost wages, plus all the time that we've put into our business, we can be making 5.5%. So Bitcoin is up 40%. Okay, thanks, Francis. Good to know. I know nothing about Bitcoin. But this is the thing. I want you to see your business as an investment because you can now turn your business into an asset that performs better than what's been happening in the market. You get to control the return. And most of us don't even see it that way, right? We have to plan for it though. And planning for it comes in the form of building our financial plan in business. So that's eye-opener number one, right? Is that, oh my gosh, we've been building an investment that is not paying off for most of us. So can you just put in the chat that landed with you, that you got eye-opener number one? That's clear. You're now going to think like an investor. Your business is an investment. There's a way to make it pay off. Awesome. Perfect. Very clear. Awesome. I love it. Got it. Okay. Eye-opener number two. And again, bear with me while I learn how to scroll through. Oh, it's as easy as clicking. Of course, I always make it harder than it needs to be. Okay, eye-opener number two, compensation. So in this case, I am talking about founders' compensation. Tracy, I can certainly follow up with you. I actually did research on terms of which ones are doing 5.5. I'll get you the graph on that. I'll need to update it for last month, but 2 months ago, 6% was the top. All right. So when it comes to compensation, we're talking about founders' compensation. And as I mentioned earlier in this presentation, in my last business, I was not compensating myself very well. And worse off, I was the last one to get paid, and I was getting paid the meager scraps of what the business could afford at the very end. Does that resonate with anybody? That, like, is anybody else kind of in that same boat? They're not paying themselves super well and they're paying themselves at the very end. Absolutely.
Oh, yeah,
Okay.
a lot of clients that kind of we connect with at Business Link. I mean, this sounds kind of surprising, but they almost don't know what they're paying themselves. Like they just don't know. Like it's merged in with their business accounts. They think they feel profitable because they have a good month and things, but there's lots of people, yeah, they just don't know what they're paying themselves.
Oh, you're so right, Matt. Like it ends up being very foggy, right? Very gray. You're right. All of that business and personal all merged together. That was absolutely me. I was taking money out of ATMs instead of right. It was brutal. So I so get it. I so get it. And you're right, Gerard. We focus on everything else and we put ourselves last. And we need to change that, right? Because it's that old adage, like if we don't put the oxygen mask on and if we don't take care of ourselves, there will be no business, right? So we really have to focus on getting that done. Hey, Matt, and just before I move forward, can I just ask, sorry, everybody, do we have until a quarter to the hour or to the top of the hour?
To the top of the hour.
Okay, perfect. All right, just wanted to check in and make sure. Otherwise, we were going to go really fast here through the next eye openers. All right. Okay, so compensation. So before we dive in here, I want to just make sure that we are covering off some important data, because sorry, not with compensation, with money in general, there can be feelings of guilt, shame, embarrassment, overwhelm. I have felt them all. And so I want to share with you that if you're feeling any of those things, you're not alone. These are
Mhm.
some stats. Some of these are actually pre-COVID, some of them are not. So, for example, in Canada right now, we have a 13, sorry, what happened there? Sorry, my chat, there we go. We have a $13.4 trillion um, deficit when it comes to Canadians' retirement needs. 13.4. And the number one issue that's fueling that deficit is entrepreneurship, because we're barely making enough to get by, let alone setting money aside into our RRSP, right? So that's one number that we need to be aware of. The other number that we need to be aware of is our spending habits. So right now in Canada, we're spending $1.87 for every dollar earned. That means we're overspending, right? If we earn a dollar, we're spending an extra 87 cents on that. We're saving only 5.7% of our income. Now, this number actually went up after COVID. Before COVID, we were saving less than 3%. In 1980, we were saving 20%. 20%. There was a time where we wouldn't buy a house unless we had all the cash for it, right? There used to be a day where we were strong fiscal stewards, not so much right now. 23,000 is our average consumer debt per Canadian, 23,035. And just to be clear, this is consumer debt. This does not include mortgages. This is lines of credit. This is cards. This is credit cards, $23,000. 46% of Canadians, this is pre-COVID, were $200 away from insolvency. Insolvency means that you just don't make enough money to be able to pay your monthly expenses, your monthly burn rate in your personal lives. 46, that's almost 50% of Canadians. This is why when COVID hit, the government needed to rush in, both for Canadians and for founders, because we didn't have money stashed aside. 28% of Canadians, over a quarter of us, are what we call un or underbanked, which means we can't access a bank account, we can't open one up, or if we can, we don't get access to credit. A quarter of us. And then 2 in 10 Canadians could access $1,000 of cash in the event of an emergency. Those were pre-COVID numbers. So you can see we weren't in a great state. And why I bring this up again is because I want you to know that you're not alone if you're feeling it, any of this, right? If any of this is in your category here, if this is your life or your experience, again, you're not alone. But I want you to know that we can change this going forward. So moving forward here, I want to talk, actually, maybe Matt, I'll just stop there for a second. Is there anything on that slide that popped out to you or anything that people had questions on?
No, but we do have a couple of questions that kind of came in there. Some around the kind of savings rate and those things. We might just park those for a minute here. But we've got one that says for startup costs, as a new business owner, are we able to reimburse some funds that we took out of pocket before securing the business loan?
Yes, absolutely. So just a reminder that today we're talking about personal finance and why that's so important in business. But to answer that question, yes, we should be, right? So every single dollar that we invest in our business investment, we should be taking track of, right? Keeping that receipt and making sure that we have a record of those expenses because there's two reasons for that. One reason is that that is your investment in. So we want to track that investment in. That should be showing as a shareholder loan back to the owner, right? Because that's money that you put in. The business should be able to repay that to you at some point. So that's one reason why we track it. The other reason why we track it is because if you go to secure financing, right? Many lenders now they want what's called proof of funds. They want to know that you as the owner have invested into your own business and they don't just want your word for it, they want the proof. So they want the receipt. And in many cases, it needs to be from what they call unborrowed sources. So that means if you've used a credit card for that expense, that's borrowed money. So they want to see that you have paid off the credit card so that it now becomes an investment from unborrowed sources. So great question.
Yeah,
Great.
that's awesome. There are a few questions, but you know what? I'm going to kind of just be a little bit selective. That keeps us a bit more kind of tightly related to the kind of topic at hand. So we've got quite lots of questions around savings and things like that. But I think for now we're good to kind of move ahead.
Okay, awesome. And then with whatever time we have later, right, we can see what we can address in our call.
For sure. Thanks.
Again, I don't know why I have such a hard time flipping the screen. Why am I not able to do that? Okay, everybody's getting a, I'm sorry, guys. I'm making you dizzy, I'm sure. All right, so I just want to highlight the 5 pillars. Before we get into compensation, I want to talk about these 5 pillars of fiscal stewardship. So pillar number 1 is spending. Spending, pretty easy. We've got a couple different categories: spending on needs, things like your mortgage; spending on wants, things like Netflix; spending on splurges, things like eating out, entertainment, Stampede gigs, right? Like those, those are the splurges under the spend account. I am curious, and I lost my chat, and I want to come back to see if I can get it. But I'm curious, can people put in the chat, when it comes to splurging, if we know that we are overspending by 87 cents on every dollar that we earn on average, that's not all of you, I've lumped us all into the same bucket. But if we know that we're overspending, where are we getting that extra 87 cents from? Yes, credit, absolutely, you've got it. And we know that a credit card is anywhere from 19.99% interest all the way up to 24.99, again, depending on your credit, right? So that extra 87 cents that we overspend, that turns into multiple figures, right, when we don't start paying down our debt. So the other category of spend is debt repayment, right? So needs, wants, splurges, and then for many of us, we need to put a debt repayment plan together under our spend category. The next pillar is save, and I'm just going to keep it really simple here. We are in a society where we have been taught, and unfortunately, we teach our kids to save to spend, right? It's in all of our language. You want to go to a holiday? Oh, let's save. You want to buy a book? Oh, we'll just save up to go get it, right? Savings is actually your emergency net. It's your safety blanket. You get your savings to a specific amount in your account that you can liquidate, that's cash on hand, right? And then once you get there with your savings account, you stop saving. It's that easy. So whether you want 1 month, 3 months, 6 months of savings, I wouldn't go as high as 6 months because then that number sounds overwhelming and you're going to say, I'll never get there. So why bother starting? Right? Like just start with, I want to have $5,000 in a savings account. I want to have 10. Whatever your number is, you get there and then you stop saving. So saving is your emergency blanket. That's what savings is. Investing, the primary goal of investments is to actually make sure that your retirement is secured. So savings is short-term security. Investing, first and foremost, is long-term security. It's to make sure you have enough in retirement. Once you have that number, then you can go and become the day trader and start moving everything around. And I want to make this money, make an extra 5 or 6% here. But you don't do that until you know that you've got your long-term nest egg established. So that's the primary goal of investments. Share is interesting. So we talk a lot about spending, saving, investing in our society. Sharing is how we have impact in the world, in our community. So it's with churches we tithe, right? It could be point of sale when you're giving a donation to the Kids Wish Foundation or a hospital. It could be door to door, right? When people are soliciting door to door for different causes. So sharing is how we give back to the community. Sharing is also taxes. It's about social impact. So in our 5 pillars, this is where your taxes fit. And then the last pillar is earning, right? And earning what we need. So in this wake-up call that we are talking about, I want you to reframe this whole idea of personal budgets, because we're in a society now with personal budgets where we do what we can with what we make. I want you to reframe it from this perspective of, what do we need to earn to make sure that each one of these pillars is solid? This becomes the wake-up call. How much do I need to be earning? Now, unfortunately, for many of us, we start, and I saw somebody say use the arrow key, and unfortunately, the arrow keys are not working for me. So I'm going to try again. There we go. I just need to be gentle. Unfortunately, for many of us, when we start our business, we have this notion that the business is going to solve all of our financial issues at home. And unfortunately, what happens is we start off a business and we started off with further compromising our financial situation at home. So again, I did many of these, so no judgment here. So took out a line of credit. I used my credit card to pay for a lot of my startup expenses in my business back in 2002. I did not take out a personal loan, but many of us do. My savings, I wiped out every last cent. To start my business because I knew I had a sure thing. In our investment category, again, some of these weren't me, but for many founders, they put liens on property, right? Which means that their house or their car could go in the event that they can't repay the loan. They take out what's called a promissory note. And a promissory note, many lenders will not lend now without a promissory note being signed. But a promissory note is a legally binding document that says in the event that the business can't repay the loan, then you personally are obligated to repay the loan. I did cash in all of my investments. So I cashed in all my RSPs to start the business. I even sold my home, sold my house, and put all the equity of it into the business. You're going to see why this was so tragic here in a moment. And then reduced contribution. So again, as we talked about, many of us aren't putting that money aside into RRSPs every month, right? Not making up that retirement shortfall number. With respect to sharing, many of us are not taking off the taxes. So when we pay ourselves that meager salary at the end of the month, we're the last ones to get paid, we're not setting aside the taxes every month. So at the end of the year, we end up with this huge tax bill that further erodes our financial security, because maybe then we go to a line of credit, right? Or we cash something in to be able to get the taxes paid. And as we talked about, our earnings are reduced, right? We're taking less than fair market value for the work that we're actually doing. So Matt, I just want to pause there for a second. Were there any questions that came up on those pillars?
There aren't, but I maybe have one. Just in
Yeah.
terms, we're not saying that you shouldn't invest or personally, are we? Like, so if you are planning to start a business, it's very, very likely that you're going to have to bring some personal investment to this. We're not saying in all circumstances, like Because some of the cheapest money people will be able to access is maybe a home equity line of credit. Like it's it's not as simple as that, hey?
Yeah, great question. So you're right, you can invest in the business, absolutely. But I think the first question that we need to be able to answer in that situation is, what is my return going to be? And knowing exactly what that return is. And how we do that is we do a business budget, right? Like the business budget is actually going to show us what that return is going to be and how we make it stronger. So if we're going to take that risk, and I don't want to call it a gamble, because we eliminate the risk and we eliminate the gamble by actually building the financial plan that shows us what the ROI is going to be on that investment. So yeah,
Yeah,
hopefully that answers that.
it definitely does. There's a couple of
Perfect.
maybe quick technical questions, which
Yeah.
might even just be as simple as a yes or no. As a business, if I use my business credit card to acquire business expense, is the interest rate considered a business expense also?
Yes.
Yes, it is. And someone else, I'm a newcomer and I'm not sure if GST is an expense of the customer or my business.
So the GST is it's a wash, right? So what you pay in GST versus what you earn, that difference is either paid back to you or it goes out. But it's an expense of the business, but that expense gets reimbursed by the government depending on what you actually spent versus what you received in GST.
Yeah, you're just becoming essentially the tax collector, aren't you,
Yes,
for the government? You take five and you give five to our friends at the CRA. Yeah.
absolutely. Our friends, I love it. There we go. All right. So here's the wake up call, is that what I would love for all of you, what we're going to do together in the wake up call challenge starting Friday, we are actually going to build your personal budget by understanding exactly what you need to spend your money on here. So when we talk about spending, we're going to talk about smart spending. So it's not about coming from this place of scarcity and, oh, we can't afford it or we have to eliminate all of these things. It's about, where do you want to spend your money smartly? Do you want to spend money on experiences with your family? Do you want to spend money on healthy food? Do you want to spend money on specific healthcare? Right? So we're going to get to do all of that together starting Friday. And then together, we're going to build a 36-month debt repayment plan. We're actually going to list out all of your debt. We're going to put it into a calculator, and it's going to tell us exactly what the monthly number is going to be, so that you can wipe out all of your debt in 36 months. Because this is why I'm so excited to work with founders, because there's no ceiling to how much you can earn. There's no ceiling. I've heard all the excuses, right? There's no time. I don't have enough people. There's no ceiling to how much money you can be making in business. So this is why I want you to know these numbers, because once you get clear on how much you need to earn, that's what actually allows you to make it, right? It's not knowing what the number is that you're just like walking around in this fog and paying yourself the scraps. So that's what we're going to do under spend. Under save is really easy. We're just going to figure out how much do you want in your account and how much is that going to mean monthly. Investing, I'm going to speak to that in a moment, but we're actually going to uncover how much you're going to need for retirement. And we have a calculator that will do that. So it's only going to take you 25 minutes to figure this out. Sharing, we're going to plan for all of the taxes, right? And we're going to plan for your give back campaign, right? Your giving back, your charitable donations, how you want to make a difference in the world. Once we figure out those numbers, again, this is for your personal budget, that reveals what we call the stronghold number. This is the number you need to be making in business. Not that, I want to be a fancy millionaire, billionaire, I guess these days everybody talks about living on a yacht. These are the absolute must-haves to keep you and your family secure. That is the number the business needs to be paying you every month. So that is what we call the stronghold number. And again, we get to do this together starting Friday for free. And I'm going to tell you exactly what it's going to look like, the agenda, as we move forward into that space. But that's the eye opener here. And in most cases, when we're working with founders, I have to tell you, what founders think they need to earn versus what they need to earn, usually it's 2.3 times more than what they're currently earning. It's that much more. It's that much more. So then we have a goal for the business. All right. Any questions there, Matt?
There are no questions. No.
No questions. All right. I wonder, I think I might need to ask a question. Oh, someone had to leave early. Can I just get 3 okays in the chat to make sure everybody's still with us?
Yeah,
Everybody's
we
still
do.
awesome. Okay, good. Sorry, I wasn't asking lots of questions there. All
Wow.
right.
The
So
one which is just you'll get folks will get an email after with the kind of instructions and directions of what to do next as well. So don't feel like if you miss anything here, there's definitely going to be kind of a follow-up there to watch out for in your inbox.
exactly. Yep. Thanks, Matt. We're gonna follow up with you lots. We're gonna talk about it here. We're gonna give you an email. We're gonna give you a code and make sure that you are ready to go. All right. So third eye opener here, our wake up call, is our retirement shortfall. So this kind of spins off of what we were just talking about when we were talking about the investment category. And when we're talking about retirement shortfall, and again, I don't know why I'm having such a hard time, so I'll keep talking as I try to figure out how to turn this. We are looking to figure out exactly between what your current assets are and what you need for retirement. That is what we mean by shortfall. So here in this case, I want to show you the calculator that we have for you. So this is going to be your calculator. This is a calculator that most of if you have a financial advisor, your financial advisor has something very similar to this, but it's behind the scenes and they're working on it. It's kind of like the Wizard of Oz when they're behind the curtains and they're creating all of this magic. I want to give you the calculator so that you can have informed decisions now or informed conversations with your financial advisor. So together, I'm going to show you how to fill it out. We're going to put in your current age and age that you want to retire and how long you think you're going to live. And then we're going to play with some of these numbers, including what are your current investments or retirement assets actually performing at with respect to ROI. We're going to talk about what you think they might be doing after. And then we're going to play with this little nozzle here too, which is inflation, right? I don't know if you remember, but inflation was as high as 8.9% not so long as a year ago. And you're going to see exactly what that would mean for your retirement. So we're going to play with those numbers. And then we're going to come over here and you get to play with what you want to be earning in retirement. The calculator will do all of the rest of the math and it will figure out based on inflation over here at 3%. If we think we need $100,000 to live off of by the time we're 62, that 100,000 by the time we're 62 is actually going to be 165. Right? So it's going to do all of this work for you. And by the time we finish this exercise, which is going to be next Wednesday, it's going to show us exactly what our retirement shortfall is. So in this particular example, our shortfall is $976,000 with change. So now it's showing us if we did nothing else right now, we would only have 13 years of retirement funds available. We were planning on 20, but we only have 13 years. And if we wanted the full retirement goal to be hit, we would need to invest an additional $26,000 per year for us to reach our goal of being able to retire off of 100,000. Now, I want to ask you, I do have a question for everybody. I want to ask you that $976,000 shortfall, where else could we find that money if we're not going to be investing monthly into the investments? Where else could we find 976,000? Inheritance. Inheritance. No. Oh, Rio. Yes. Bingo. I love it. And I laugh because like who wouldn't want inheritance, right? The lottery. I think this is why we all play these things to say, okay, come on, money. But Rio nailed it. 976. This is why we do the retirement shortfall, is because I want you to realize now that you have the opportunity to turn your business into an investment that is worth $976,000 at the time that you want to sell it. And unfortunately, what I find tragic in this conversation is that many founders don't even think or conceive of being able to sell their business. They've never even thought of it. Do you see that a lot, Matt, in the work that you do with people coming in?
Absolutely. We did some strategic planning yesterday as an organization, and that issue absolutely came up around succession and thinking about the future and people selling their business as well. And yeah, lots of people just aren't they get to the point and it's really not sellable in its current form. Yeah.
Yeah. So it's so a couple of things there. A, know that you can sell your business. Every single business can be sold. We just worked with whatever, 89 service practitioners yesterday. It's like, oh, we have a book of business we can sell. Oh, we have standard operating procedures we can sell. Oh, we have an infrastructure we can sell. Everyone has something they can sell. So that's item number one. Two, to your point, Matt, it typically takes like 5 years to get your business in a position to be ready for sale, right? And that means making sure all of your numbers are lining up too, and they're all organized and they're all sitting in the right filing cabinet, right? So that they're all being processed. And then three is that we actually have to plan for that number, right?
Mhm.
That number, we need to plan strategically for it. And this number comes from what we call the valuation. So back to Rio, how do you figure out the selling price of a company? A selling price usually comes from three different things, and there's an art to valuation. So I'm definitely making it a lot easier than it is, but you usually have three sources. One is what we call cash flow or revenue, right? Two is what are the assets of the business? And the third, again, is what is the net profit? So every single business, if we go back to that first eye opener, the other reason why we want to build up that net profit is that every industry has as a separate or a unique, what they call multiple. So they take that net profit and they multiply it by that industry number. So for example, in financial services is 1.5. So a $9,000 net profit times 1.5 equals a selling price of $13,500. In tech, that multiple is 10. So every industry has a different multiple. My point here is that profit is not a dirty word, right? We need to get your business. If you know that you want your business to be worth 976,000, we know that we need to get your net profit in your business to a certain number so that that multiple will hit. And that is done by building a budget. The net profit is actually where we start in the planning process. It's not at the end. It's not, let's just wait and hope and see 4 months after year end when the accountant provides us with our financial statements to see if we made any money situation. It's I'm going into 2025 knowing that I want a net profit of X, right? And so you work towards it. Are you going to be worth 976 in the first year? Probably not. But after 5 years, you can absolutely get there. And your numbers will show you exactly how to make that happen. So I want this to really land with everybody today, that profit is not a dirty word in business. We live in a society where, there's a stigma around profiting. It's greedy, it's opportunistic, it's capitalistic, right? Anytime you hear a bad story in the media about a company doing something wrong, it's always at the sake of profit, right? So profit, three really important reasons for you why you want to go after it. First, it is your emergency fund. It's your safety net in life and business, right? So that profit, we put that aside in our business as well, and it becomes the business's emergency fund. It is your return on investment. We talked about it in eye opener number one. That net profit in your business is your short-term ROI. And as we just talked about, it is your long-term ROI because you get to sell your business for that value. And the third reason why profit is so important, I have to tell you, almost every single entrepreneur I meet with says that they started their business because they want to be able to give back and make a difference in the world. You do that from profit. You don't compromise yourself and your rates and your crew and your family and your paycheck to be able to do that. That comes from profitability. So we are so excited. Business Link, Matt, his crew over at Business Link, we're so excited to help you build your business budget, right? Because this will show you how to be profitable. But first, we have to build your personal budget
I
because
hear
we need to go for it, Matt.
Yeah, I hear that so often, Taunya. It really resonates, that idea of profit and people's relationship with that. And so many small business owners, they see maybe their advantage of, oh, I can be cheaper, or I can make less profit and things like that. But you're absolutely right. For them to be sustainable and around in 5 years, I feel that so many businesses that we interact with, they might not be a social enterprise, but in reality, they are they serving a purpose. They're trying to strengthen their community. They're trying to kind of give back. I know actually some of the business owners on the call today, just looking through the list, and although they're for-profit businesses, they serve a social purpose, like and whether that's just employment of their people, helping their employees pay their rent and mortgage. If we're not profitable, we're not going to be around in a year's time. So it's yeah, definitely don't feel that's it. Um, yeah, perfect.
Awesome. Yeah, profit, yeah, we have to change the narrative for sure, right? Like absolutely. Profit is key. That's where our purpose is amplified, right? As a business owner. All right. So just to recap, eye opener number one, return on investment, right? We talked about that. You can go do the calculations. We'll do it again on Thursday, but your business is an investment. It is our job as the business owner to make it sound. It's not the job of our bookkeeper. It's not the job of the accountant. It's on us to make sure that that works. Eye opener number two, compensation. We went through that in detail. You have to get paid not only what you're worth, so not only fair market value is what we should be budgeting for, but you need to make sure that you are getting paid what you need, right? And the brilliance here is that you have no ceiling to how much you can earn. There's no ceiling to it. And then eye opener number three is your retirement needs. So what is your retirement shortfall? You have a couple of options. You can either contribute to it monthly, as we talked about, take that number over and we can put it in your investment budget, right? So monthly, you'll see what you need to contribute. Or you have a backup option too, which I don't want to say it's the backup. I would prefer that it is your number one, is that you can turn your business into that asset specifically. So I am going to um, the plan. Sorry, this is a slide I just wanted to talk about because those three recaps that we did, the ROI, the compensation, and the retirement needs. I'm hoping now, and I hope you can put it in the chat, and I see a question from Tom here, which is great, and I'll get to you, Tom, in a second. But I hope you can see now that when you get those numbers together, you now have the goal. Remember, we said like the gap is the big reason why founders aren't making it. So now you have a goal. You know exactly what you need your business to be worth. You know exactly what you need to be paid. You've got a financial goal for the business. You now have alignment with it. You haven't picked this out of the thin air saying, oh, I don't know, it'd be nice if I could make 1 million. You know exactly what that number needs to be with precision, right? So now you're emotionally aligned to the goal. And then now comes the plan, right? So we're going to work together on building the personal plan, and then we're going to work together on building the business budget, and we're going to do that through Business Link. So I I'm what I'd like to, Tom asked a question and he put it to everyone. So I'm just going to be very clear again. So our company is called Nail the Numbers. We work with founders across North America to build budgets, personal budgets, basic budgets, and then bold budgets. So again, the company name is Nail the Numbers. Our goal is pretty audacious, right? 1.7 million business owners we want trained. So Tom, to answer your question, we have partnered with organizations like Business Link because Business Link has the agents that can now support founders in helping them to build business budgets. So founders can still work with us in taking the course, but now they've got coaches right through Business Link that can help them through those details of each step of building that business budget. So I hope that's clear now.
And
Matt, do
business
you want to weigh in on that?
Yeah, I'll weigh in on that. We BusinessLink don't charge for any of our services as well. So clients who are committed definitely get the support of the BusinessLink team without any cost as well.
Perfect. Thanks, Matt. Okay, so thanks, Tom. Great. That was a great question. So here is what I am inviting all of you to do, and I really hope you're going to take us up on this offer. So this is the Wake Up Call 5-day challenge. There's the QR code. I think maybe Julian is going to put a link into the chat, and we are also going to follow up with an email with the link. On this page, when you hit this QR code, you're going to see everything about the Wake Up Call Challenge. You're going to see that we're starting on Friday, this Friday, November 22nd. It kicks off at 8:35 Pacific, so that's going to be 9:35 your time. There are no calls over the weekend. So on Friday, I'm going to set you up for success. I'm going to give you a checklist, because that checklist over the weekend, you're going to collect all your financial data. You're going to capture the numbers that we need from your current financial situation. And then we're going to chart them into an Excel spreadsheet. We're going to get all of that organized. And we've got all the tools for you, right? All the calculators. So that's what we do over the weekend. Then on Monday, we show up again live. And on Monday, we're going to go through all of your spending and your debt repayment, right? Your 36-month debt repayment plan. So we're going to do that together. 25 minutes in the morning. You'll probably want to budget an additional 30 minutes later that day to get that work done. Tuesday, we take stock of all of your assets, including understanding your retirement shortfall. Wednesday, we're going to look at your giving strategy and your taxes, like what we need to budget for those. And then Thursday is the big reveal. We're going to understand what your stronghold number is, and then we're going to introduce you to how to make that number happen in your business budget. So we're going to give you that framework of what that looks like. Now, through Business Link, we have an in-depth boot camp that's going to happen in January, and I think you're already automatically enrolled in that. So we're just taking you step by step by step, puzzle piece by puzzle piece by puzzle piece to figure it all out. So this is just the beginning of our journey. We have so much great work that we get to do together. Matt, do you want to weigh in on anything there on what I said?
Just a couple of questions that I think will kind of answer the things to weigh in on. So one is, I'll have to miss one of the sessions. Is it still okay to attend the other four?
Absolutely. So little secret, not so secret because it's being recorded. So we are going to record the calls, but we are not sending out the recordings. And we're doing that because we want you to participate live. I'm showing up live. I don't want to show up live to a group of people that I can't see. And otherwise, I just invite you into the Stronghold and you could do it on your own. So we get a lot of energy off of each other. And then what we do is we actually have, it's not a webinar. We're going to see each other. So there's interaction. I want you to take your mics off mute. I want you to take your cameras off. We're going to work together as a collective to get this done. So to answer your question, you can always reach out, ask for the recording, but definitely show up for the 4 calls, the ones that you get. And Caitlin, it costs nothing, right? Because of Business Link, they've already invested in you. So this is free. This is why you have the code, right? That you're going to put in so that there's no cost.
Yeah, thanks for clarifying that. There were a couple of other questions I just want to kind of catch there. Are we going to have the recording of this webinar? Yeah, we'll send a follow-up email that contains links and all of those, all that good stuff. I suppose one thing I would like to mention is I think there will be people on this course, on this webinar today who are nervous about going there, who are like, it makes them maybe slightly anxious. I mean, my advice to that group, and I'm sure you'll want to add, Taunya, is start. Like attend the wake up challenge. You're not going to be kind of exposed. You're not going to be it's you can kind of work through it. But if you're feeling nervous about it, I think it's probably a good reason to actually do it.
Oh, Matt, you bring up such a great point. I'm always like every conversation, I'm like, please don't forget to say this. And I'm so glad you brought it up because I forget, right? Like this was me back in 2017. My partner left and I had to do all of this math. And I remember how terrified I felt in this moment, right? And if you had the courage to show up today, I'm going to again encourage you to show up, to face that fear, because the fear is usually, it comes out of the avoidance, or it comes out of not taking action, right? Or it comes out of, afraid of what we'll see. But again, this is regardless of what we see. As founders, we know we can make those numbers happen. And this is where Matt and I are here with you on the other side to make sure that we can help you make those numbers happen. So it's just small step by small step. And to Matt's point, like if you can't, for whatever reason, get that call in, at least you'll have the recap. So when you feel courageous enough to watch the recording, you'll already have the tools. You can go into the recap and say, I'm ready to do this today, right? Take it at the pace that's right for you, but at least you'll see how to get those numbers uncovered, right? And revealed. Great point, Matt. Thank you so
No,
much.
no, perfect. Thank you. And thank you for everyone's kind of contributions and comments and questions as we've gone through. It makes it kind of much more interactive, much better there. Awesome. Well, thank you so much. We kind of reached midday here and want to send everyone off and go and have their delicious lunches or whatever their plans are for the rest of the day. I'm in beautiful downtown Edmonton right now, so I need to go and find somewhere to go. But yeah, excellent. I hope as many people as possible can obviously join that wake up challenge and go and visit the business model. Sorry, the cash flow canvas page of the Business Link website to kind of get a great overview as to what this is all about and how it fits into Business Link's other services too. So thanks again. Thanks, Taunya. See you tomorrow. Or
Thank you,
later.
Matt. Thanks, everybody.
Thanks, everyone. Bye bye.